Hi there, welcome to Commodities. Let's check in on that oil price. Now, there is good news, apparently, on the Ukrainian war. The Ukrainian president says he has agreed to work on a peace plan drafted by the US and Russia aimed at ending the conflict. So you can see oil down, not very much. Bloomberg, of course, notes that if there is an end to the fighting, it could help to unleash supply from the world's number 3 oil exporter. There was a meeting with top U.S. generals who visited the Ukrainian capital, and a peace deal could be followed by, well, it's likely to be followed by the elimination of sanctions on Moscow. We also did get the stock market weakening in the early afternoon, and oil often trades in tandem with equities. Let's have a look where the metals are trading, focusing right now on gold. Gold is slipping as well. And let's have a look at Bitcoin, because Bitcoin has come under pressure today. We did see that the biggest crypto coin going below $87,000 US. For the first time since the spring. Now, there is oil, and we'll loop back to Bitcoin in a moment. Bitcoin's rout is seen as partly due to a weakness in tech stocks, but it could be a two-way street. Perhaps that is spilling over to a lack of confidence in some of these go-go AI names, because it's a pretty similar constituency, the crypto investors and the tech enthusiasts. Quick look at where the agricultural commodities are trading. As you might expect, they're under pressure because if there is a removal of sanctions on Russia, it would release a lot of wheat, wheat mostly, onto the global market. Some corn perhaps could come out from Ukraine, but wheat is the big export from Russia. It's a dominant player. Food has largely been exempted from sanctions, but certainly would make life easier for the Russian export sector. Now, Nutrien says that its preferred site for a new potash export terminal is in Washington State. It's favoring that location. However, it hasn't made a final investment decision. The idea here, of course, exporting potash to markets in the Indo-Pacific, including China, India, and Japan. Apparently, factors that came into play here were rail freight and construction costs. The Globe and Mail quoting one observer who said that rail congestion in Vancouver, where a lot of the potash goes out right now, is a factor, and also labor disputes at the Vancouver port and on the Canadian railways. And we're watching Stella Jones. It's a maker of utility poles and railroad ties, moving up today. It was up more earlier. It's a diversified wood products player, and it introduced new 3-year growth targets. It's looking for organic sales growth of up to 5% and profit growth of more than 10%. Aluminum supplier Novelis says its employees were safely evacuated after a fire broke out at a facility in New York. The company is a key supplier to Ford Motors, and the blaze is the latest incident at the facility. It produces aluminum sheet metal for Ford vehicles. In September, a damaging fire shuttered production at the plant. Ford has said production interruptions tied to that fire will cut its adjusted profit by as much as $2 billion US this year. Okay, let's get back to the prospect of new pipelines in Canada. There is a 3-way dance going on among the Prime Minister, Mr. Carney, Alberta's Premier, Danielle Smith, and the BC Premier, David Eby, over the issue of building new pipelines through BC. Our guest says Carney has a challenge here in placating the BC leader and his own caucus as he moves towards approving projects through the province. We're joined now by Heather Exner-Pirro, a senior fellow and director of energy, natural resources and the environment at Macdonald-Laurier Institute. Thank you very much indeed for joining us.
Yeah, delighted to be here.
So there certainly seems to be something in the wind here that the Prime Minister and Danielle Smith will reach some kind of an outline accord on building, on Carney backing pipelines, particularly tied to that Pathways carbon removal or capture project in Alberta.
Yeah, absolutely. So we had, been anticipating what was, dubbed a Grey Cup summit for several months. Obviously, the Grey Cup has passed with no summit, but we understand why. Is this, the government had a confidence vote on Monday to pass the budget, and they weren't going to be, risking the Elizabeth May's votes or the NDP votes before that was passed. And the other thing so window of opportunity has opened. On the other side of the window is the UCP AGM that Premier Danielle Smith will have to be addressing her own caucus in her own base. And so hopefully she has some good news to deliver to them because she's put herself out there quite a bit as well.
And David Eby went through his own event as well, the BC Premier. His stance so far has been he's opposed to new pipelines, it appears, although he appears open to expanding capacity on the existing Trans Mountain.
Yeah, so interesting kind of evolution of Premier Eby that, last year he was kind of against most fossil fuels, certainly warmed up to the idea of LNG over the course of the last few months, which has been very welcomed. But perhaps as a quid pro quo to his base, as he's embraced gas, which BC produces in copious amounts and gets royalties from, he's had to come out pretty hard against oil and has taken in, quite a, drawing very strict lines in the sand and made this again into an Alberta-BC showdown.
And Mr. Carney, you note, has a dilemma here. He doesn't want to alienate BC. And his own caucus, you say, there is not strong support for pipelines in the Liberal caucus?
Yeah, so this is what's interesting to me is we've seen, many pipeline polls in Canada across the last 10 months since Trump was inaugurated as president down south. They're very usually, in the 70% range, what I call apple pie and motherhood kinds of numbers. And most governments don't want to be the wrong side of the 70%.
Heather, just clarify, 70% against pipelines?
Or? In favor, yeah.
Oh, in favor of pipelines. Sorry, carry on, please.
Yeah. So usually it's not easy to be on the wrong side of that kind of a divide. But obviously for the BC NDP caucus and the Liberal caucus, the divide looks a little bit different. And so that has been the political challenge for Carney. So far, he's done what I would say are the lower hanging fruits, setting up the major projects office, sprinkling money here and there. But on the pipeline issue, this is obviously going to be one where he has to expend some political capital one way or the other.
And is that the logical place to build the pipelines rather than to Hudson's Bay or, via Manitoba or the long lamented idea of a pipeline going east to central Canada? Is that really the name of the game, getting new pipelines in BC?
Well, absolutely. The easiest thing to do is what the market is doing, as your viewers would know, is the expansion of the main line going south and the expansion, as you mentioned, to Trans Mountain, which BC is not opposed to. And that should get us pretty close to about 700,000 barrels, which is, a pretty good pipeline sized. So it's the 2030s that we're starting to worry about. Trans Mountain was wildly expensive. You went through, one of the biggest cities in Canada, one of the most environmentally friendly cities in Canada. Northern Gateway seems, or what we would call, a similar Northern Gateway, seems like a much better route. Obviously, the prize is the Pacific Basin, which is short on oil, and obviously the fastest growing energy market in the world.
Northern Gateway was the pipeline that foundered in part on lack of Aboriginal consultation.
Yes, there's a few things that, kind of stymied or helped along the demise of Northern Gateway. And so actually you would have to do something different. But the landscape for industry, Indigenous relations in Canada is vastly different than it was 10 years ago. We've already seen a number of big pipeline deals where Indigenous communities have taken equity ownership. And so I think if the price was right, and if you could mitigate the impacts on Aboriginal and treaty rights, people certainly think that there's a potential to work with nations and to do something that they would be, mutually acceptable.
Yeah, it's interesting that we were talking to Canada Nickel the other day. They would like to build a nickel mine, as I'm sure you know, near Timmins or a bit north of Timmins. And there's actual Aboriginal or Indigenous equity ownership there. And that's, as you say, there seems to be a lot of progress made on that.
Yes, and the government has put up some pretty big numbers, $10 billion that they have in the federal Indigenous loan guarantee. Alberta has $3 billion in theirs, and there's some other, financing means available to that. So if that was something the First Nations along the route and along the coast in and around Prince Rupert were interested in, I think they'd find that there was, financing to line up behind them.
So what do you think? Will we get a photo up for both premiers and Mr. Carney announcing a friendly deal, a pact here?
So I think we'll certainly see an MOU. As I understand, it'll probably still be pretty high level. I think what we're looking for is that it's something that investors, can take solace in and start making some investment decisions in. A pipeline, and Premier Smith has already said she'll be not submitting the pipeline proposal until the spring. And so it'll be still a deal to make a deal on the pipeline side. There's a lot of other regulations that could be cleared away with this MOU that I think the sector is going to be looking at first, like, finally getting rid of the emissions cap, addressing the carbon market, industrial carbon tax, and those kinds of things.
Because the emissions cap is gone, so that was a real sore point for the oil and gas industry and Alberta. So Carney has made a few concessions, I suppose, at his end. One sticking point seems to be, though, will governments put up money, the billions of dollars or some of the billions of dollars needed for pipelines?
Yes, and I did hear, I was at the Canadian Heavy Oil Association conference yesterday. The numbers batting around is $20 billion for that carbon capture pipeline, $30 billion for that, quid pro quo pipeline to the Northwest Coast, and then $80 billion that you would need in production to fill it. So we're looking at some pretty big numbers, and investors are going to need quite a lot of certainty. But certainly the Canadian oil and gas sector has been, much more favored in the recent past months than in the last 5 years, I would say.
Heather, thank you very much indeed. Heather Exner-Pirot, Senior Fellow and Director of Energy, Natural Resources and Environment at the Macdonald-Laurier Institute. Up next, the Trump administration is reporting signs that sanctions on major Russian oil producers are harming Moscow's ability to fund its war on Ukraine. We'll have more after the break. Okay, oil down. Hopefully, the sides in the Ukraine war are moving towards some kind of a ceasefire. Tomorrow is the deadline, though, when new U.S. sanctions on Russian oil producers Rosneft and Lukoil are set to take effect. India and China, the two biggest buyers of Russian oil, have begun, apparently, to curb their purchases. We're joined by Vikas Dwivedi, who is Global Energy Strategist at Macquarie Group. Thank you very much indeed for joining us. It's a tough day because we've got talk of peace in the air, and that's affecting oil, apparently. But just remind us, these sanctions on, leaving that out for now, these sanctions on the Russian oil giants are seen as a serious business.
Absolutely. They are serious because they're very targeted. Previous rounds of sanctions have been a little bit more general and loose. These are very specific to those two big companies you mentioned. And I think that's making it a little bit tougher for all of the normal workarounds that the oil market has developed for sanctions. And this isn't recent, right? This is going back decades. It's the ultimate cat and mouse game. This is a little bit more specific and more targeted set of sanctions.
I guess the question that leaps to mind, though, is will the oil leak out once again? Will the gray market figure out ways to get it out?
Yeah, we think it'll be a process that at the beginning, the oil is going to get restricted and constrained. It is difficult for even intermediaries right now to transact with oil that was bought from those two companies. And maybe more important than anything, the big buyers have really backed off. India and China specifically, really, it's largely India, has stopped buying. And we think, the last transactions will be tomorrow. So, yeah, we think you're going to see a loss of Russian oil. But to the second half of your question, will the gray market eventually do its thing? And we think the answer there is yes. It's hard to exactly know when and all the different routes and mechanisms, but the profit motive is just going to be too strong if Russian barrels are deeply discounted, $20, $25 a barrel below the market. People will figure out a way to do it.
Yeah, I mean, when you consider world oil flows are 100 million barrels every day, our world oil consumption, it's hard to keep track of that tidal wave of oil going around the world every day.
It is. The gray market fleet is really large. And there's been enough sanctions over so many years around the world that there's a lot of workarounds that are in place. And one of the assumptions has been, the enforcement and the penalties for, not adhering to the sanctions have also been a little bit loose. So we'll see how this round actually looks, right? Like, is it worth the risk to do transactions with sanctioned barrels? History has been a definitive yes, it is. So we'll see if this one follows that trend.
It's interesting. I haven't seen much public pushback from India or China on really extraterritorial measures by the Americans. For example, they've threatened these secondary sanctions that could hurt financial institutions or could hurt insurance companies. You think New Delhi and Beijing would be indignant about that?
Well, there certainly has been some of that, with a lot of the Indian, officers that are, part of the government. Initially, they rolled out and said, look, we need our own sovereign, kind of goals in terms of energy security and who we buy from, et cetera. But that rhetoric, to your point, has died down and it's gotten a lot quieter. And, the companies involved, they've been fairly vocal in saying they will adhere to the sanctions. China, similar. We didn't hear as much initially from China to begin with, but they've largely been going along with the sanctions requirements.
Before we let you go, we've only got about a minute. What's your call on the global oil price over the next year? Do you see a strong updraft or downdraft? I know it's impossible to answer categorically.
Yeah, we see a big drop in price coming, even with the Russian sanctions and the oil coming out of the market for a while. The reality is there's just way too much oil being brought to the market from new growth and returning supply that was off the market, from OPEC. As an example, the U.S. is still growing, Brazil and Guyana. So you've got a really wide array of sources of new supply. And demand is okay. By the way, demand actually looks pretty good, all things considered. But it's not, in our estimates, demand is only growing at about 1/4 of the rate of supply this next several months. So, we see a big down move. The catalyst has to be, though, the significant buildup of oil on the water has to arrive on shore in visible areas, right, like the U.S. and Europe. If it's all China and it's all offshore, the price pullback may not actually happen the way the supply-demand balance suggests it should.
We'd better jump. Thank you very much indeed for joining us. Vikas Dwivedi is a global energy strategist at Macquarie Group. Up next, there's a massive construction wave of natural gas pipelines unfolding in the U.S. South. We're going to have more on that next. The huge build of natural gas pipelines unfolding in the southern U.S. as companies rush to supply methane to those huge LNG export projects along the Gulf of Mexico. We're joined by Bloomberg's Emma Sanchez. Emma, thanks very much for giving us the time. Just remind us, why is there so much gas and why are they anxious to move it?
Right. So mainly these natural gas pipelines are going to export to countries in Europe and Asia. And for the most part, Europe is trying to wean off of Russian piped natural gas, whereas Asia is trying to wean off of dirtier fuels like coal power.
And a lot of this gas, it's not a new issue. Some of these pipelines have been in the works for years. It's gas that's produced when they pump oil in the shale.
Yes, that is correct. Especially in West Texas, there's a lot of gas. And so these pipelines will help with some of that oversupply of natural gas in the West Texas region.
Right, and your reporting notes that even before President Trump came into office, these pipelines were under construction. You have a number in your story here, which is really amazing. Pipelines set to begin operations next year will add a total of about 18 billion cubic feet of capacity, and obviously it's hard to be exact about that. But U.S. total capacity is only a bit more than 100 billion right now, so this is a massive addition.
You are correct. It's really big, and it just goes to show our confidence in the overseas demand. You know, in 2022, we became the largest exporter of liquefied natural gas, and that number is set to grow by a third in just 5 years. So that really just goes to show, you know, us as a country, our confidence that this will continue for years to come.
And you do note that they try to keep it within state borders. Texas and Louisiana are pretty pipeline friendly, because if you cross the state border, you have to get into the federal regulatory game, and that can hold things up.
Yes, that's been a particular issue with building interstate pipelines, so pipelines that cross between states in the northeastern region of the U.S., where environmentalists have been able to use legal battles to halt pipelines, and it just takes a lot longer. So it's been easier in states like Oklahoma, Texas, and Louisiana.
Thank you very much, Emma. Really appreciate it. Emma Sanchez of Bloomberg. Let's switch to gold. Bloomberg is a great feature. It says gold's record run has been profitable for the billionaire Muthoot family of India. They run an outfit called Muthoot Finance, and it has doled out gold loans for almost 9 decades. Consumers can come in with jewelry and get loans, often small loans. Company stock has hit a record. They have thousands of stores across the nation. And of course, gold, an important part of Indian culture. Brides, of course, are endowed with gold, and it's an important store of family wealth. In fact, international players are coming into the Indian gold lending business. Bain Capital has agreed to pay about $500 million US for a stake of 18% in another gold lender. And Mitsubishi UFJ Financial is also in talks to get into the gold lending business. Muthoot has 7,000 plus branches, and often actually they're in quite humble locations, albeit with security, mind you. Lower income people, small borrowers, can find it easier to go to Muthoot, a local outlet, and get a loan. They're not that cheap, though. Some of these loans are 1.25% a month, so people can end up paying about 19% a year. Interesting historical note, the Muthoot clan is Orthodox Christian, and that's a pretty tiny minority in the predominantly Hindu nation. Thank you very much indeed for watching Commodities. The close is up next.